Okay, so let's get right into it. Today, we're looking at a company called Grupo Aeroportuario del Sureste, but you'll almost always see it by its stock ticker, ASR. And for any investor, this company is a real head-scratcher right now. It's this fantastic, world-class business that suddenly hit a major crossroads. And this, right here, is the million-dollar question. I mean, you see an 8% dividend yield on a big, stable infrastructure company, and that gets your attention, right? But is it a screaming bargain, a sign that the market is just completely missing the boat on a great company? Or is it a huge red flag, a classic value trap just waiting to spring on you? That's what we're here to unpack. So, just who is ASR? Well, they're a total powerhouse in the airport world. They started out with a bunch of airports in southeastern Mexico, but they've grown into a multinational player with really key airports in Puerto Rico and Colombia. And that diversification, it's going to be a huge piece of the story. To really get what's going on, you have to start with the bull case. You need to see why, for so many years, ASR has been seen as this premium, almost fortress-like asset, the kind of stock any conservative investor would have loved to have in their portfolio. It all starts with this number, 70%. And what is that? That's ASXR's EBITDA profit margin. Now, in any industry, that is an absolutely elite number. But for a business like airports that spends so much on infrastructure, it's almost unreal. This is the economic engine that powers absolutely everything else for them. And to put that 70% into perspective, it's not just good, it's truly world-class. ASR's profitability just towers over these huge European operators like ANA in Spain or Fraport in Germany. It's really a testament to how incredibly profitable the Mexican airport concession model can be, and ASR are masters at running that playbook. And all that cash flow, all that profitability has let ASR build a balance sheet that is, well, it's a thing of beauty. We're talking negative net debt. In plain English, that means they have more cash sitting in the bank than all of their debt combined. Over 22 billion pesos in cash. That gives them incredible flexibility to grow the business and, of course, to pay out that massive dividend we talked about. Now, here's the really smart part. Management didn't just get comfortable with their super profitable Mexican airports. They made a really timely and frankly brilliant move to expand internationally. They bought airport concessions in Puerto Rico and Colombia. It was a strategic masterstroke that's really paying off for them right now. And you can see exactly why that diversification was so critical right here. Their core Mexican market has kind of hit a wall. Passenger numbers are flat or even down a bit. But at the same time, their international airports in Puerto Rico and Colombia are on fire, surging with strong double-digit growth. Those airports are now the real growth engine for ASR, protecting them from the slowdown back home. So there's your fortress, insanely profitable, rock-solid finances, and new growth engines firing on all cylinders. But every fortress can come under siege. And now we've got to look at the other side of the coin, the new turbulence that's creating the bear case for ASR. The whole bear argument really starts here. You see, even with that great international growth, a whopping 59%, nearly 60% of the company's entire revenue comes from just one airport, Cancun. And that massive concentration risk has suddenly become a huge vulnerability. For decades, Cancun had an absolute monopoly. If you wanted to visit Mexico's Mayan Riviera and those famous beaches, you flew into Cancun, period. That was your only option. Well, not anymore. For the first time ever, Cancun is facing a direct government-backed competitor with the brand new Tulum airport. This completely changes the game for ASR's crown jewel asset. And on top of that new competitor, there's a new political risk too. The government in Mexico has been taking actions that have made investors nervous about the aviation sector. This quote really nails the fear. There's a growing tail risk. That small but very real possibility that the government could just decide to change the rules of the game for these very profitable airport deals. For investors, that's a new unpredictable risk that just wasn't really on the radar a few years back. Okay, so you've got the fortress, but it's facing new competition and these political headwinds. How is the market reacting to all this? Well, the valuation tells the whole story of this tug of war between the bulls and the bears. The market's verdict is just crystal clear when you look at the numbers. Check out the price-to-earnings ratio. ASR is trading at around 13 times earnings, which is a massive discount to its direct competitors in Mexico, GAP and OMA. But then, look at the dividend yield. At over 8%, it just blows them out of the water. So what's this all telling us? The market is definitely seeing the risks. The new competitor in Tulum, the political uncertainty, it's pricing all that fear right into the stock. The multi-billion-dollar question for you as an investor is whether the market has gone too far. Has it overcorrected and in doing so created a genuine bargain? All right, we've laid out the fortress and the turbulence. We've seen how the market is pricing it all in. Now it's time to bring it all home and boil this down to the one essential conflict that an investor really has to grapple with. At the end of the day, it all comes down to this. On one side, you've got the bull case, a world-class company with unbelievable profit margins, a balance sheet made of granite, and these proven international growth drivers. And on the other side, you've got the bear case, a new competitor attacking its most important asset and growing political risk in its biggest market. That is the central conflict right there. And that brings us to the one question that you, as an investor, really have to answer for yourself. Is the powerful momentum coming from Colombia and Puerto Rico strong enough to carry this whole company forward, even if its main engine in Cancun starts to sputter a little? How you answer that question is the key to deciding if ASR is a deep value opportunity or a classic value trap.